So in this video I'm going to show you the quickest way to become a very efficient trader, and we're going to do it using two indicators so that it fits within free trading view. So let's jump straight into it. So on my chart you're going to see that there is two indicators. We've got Pip Hunter SSV2 and Pip Hunter Baseline Overlay. I'm going to run through all the settings very quickly. You can see that this is completely default in setting, and then when we come to the Style tab all we've got is all of these plots turned off and the rest turned on. Now if we run over to Baseline Overlay, you can see that in this box we've got this set to 21. If we scroll all the way down, we're going to see Show Levels as Fractal Chaos Channel turned on. And then in the Style tab we go to On, all of them down to the Chaos Channels turned off, and then the Chaos Channels turned on. All of them down to the stars turned off, and then the stars turned on, and then this plot right here. And that's all you're going to need. Now you can see your charts are going to be set up like this. I'm trading this on the 1 hour time frame. I have also used it on very low time frames like the 15-minute. You probably can also use it on time frames such as the H4, but your trades are going to take a long period of time. So right now we're going to look at the 1 hour and we're going to go from there. So on the 1 hour time frame, the way you're going to want to do it, this goes in line with the video that I did about support and resistance with the CDOR method. This is the CDOR method set of indicators. So what we're going to do is we're going to pick up where we can draw our zones. How do we draw our zones? We take into account the areas of the chaos channels which are horizontal and very close together. So what we're going to do is we're going to go we're aiming for at least 3 points. So 1, 2, 3 and 4. At least 3, but you can have as many as you need. And the total width has got to be under 10 to 15 pips. Ideally, you want them down sort of 5, 6, 7 pips range. So in this case, it's 9.5, which is listed right here. And that makes it a good zone. Then we're going to start picking up some other zones. So if I look here, we can probably draw one through here, which is fine. Annoyingly, they are very close together. What I would say is if you end up in a scenario where you would have, and I'm just going to draw one on the screen, say you had another zone listed right here, I would pick whichever of these two had the most touches in. So in this case, it would be this one with 1, 2, 3, 4, where this one doesn't. So I would then get rid of this one because that's going to be the strongest zone left. Then we're going to keep working our way up the chart. We're just going to pick points of interest to grab. We're going to go for this one potentially because that might be too wide, but we'll check. This one is sitting at 6.9. Again, GBP, CHF, they're all going to be sitting relatively close together until we start getting into more uncharted territory. Unfortunately, at the moment, it's been consolidating quite a lot, so we're going to get a fair few touches, all within very close ranges. So 1, 2, 3, and 4. Yes, you can mix green and red lines. So 1, 2, 3, and 4. We're then going to go up higher. You can see that this gap is a little bit bigger than some of the other ones. So we're going to go to this one, and again, I'm just picking up 1, 2, 3, 4, 5. If this is within range, let me just check our sizing. Again, 7 pips, that's more than fine. Now we have a bunch of levels. The way we trade is really straightforward. We look for things in order. So first of all, we want to know what our high time frame is. Our high time frame in this is bearish. How do we know that we're looking for downwards moves? Simply this white and yellow line. If you're underneath it, then we're only looking for selling moves. And if we're above it, we're only looking for buying moves. Again, you can check with the H4, which is the 4 hour, just to confirm that both of them are singing from the same songbook. If both of them are saying down, the chances are it's going to be moving down. So now we know that we're only looking for downwards moves. What we can do is we are looking for things in order. So we're going to have this cloud being red. We know we're only looking for downwards moves. So red cloud is number 1. Number 2, you want this star. Number 3, you want a sell signal after the star and within one zone. So each one of these is a zone. If I want to capture a trade that's designed to move down from, let's say, where my cursor is right now, then I need that star to have appeared either in the current zone or one zone ago. This one is 2 zones ago because it's in the second zone. so we cannot count it. But furthermore, we need the star first. So if these were inverted, where this was the star and this was the label, that would be fine because this is within one zone. But with the order they are, even if this star was over here, we cannot short from this down to this. In the same way that we need a new label before we can take a cell from here down to wherever the next one is. And if I just zoom out, we can go pick up the next level. If there is one, which there normally is, we'll pick up this. So based off of 1, 2, and 3. Might be too wide, we will give that a measure quickly. 1 to 2. No, it's within range, so we're okay. Unfortunately with GBP CHF, it's really tightly knit at the moment, so these are very, very small moves, but we can pick up on a couple other pairs where they're a bit wider. So the way you're going to want to play it is that you're always going to get one of 3 patterns. You're going to get it where it does this, where it will do this, or the most unlikely scenario where it does this. What we're looking for is we would look to take our trade from here, or from here. So it's always once it's pulled back. Now, if I just quickly draw those positions on, so the short position here would be down to the next zone, just to the edge of the next zone. Stop loss we would put just past the previous zone. If we're doing it on the next one, it would be very similar again. And then on this one, sometimes you have to take into account the peak of this, and that's important. So if you've got a few wicks being thrown at the end of the bodies, then just set it just past those just to be on the safe side. And again, we're always going from one level to the next. So if I was to plot on here, in this case, it's very, very small. But for example, we would be like this, where you're going from one to the next. Now in this case, you don't actually get a trade because this one went through the zone all the way down. So there is no possibility there. But if we go and mark up a couple other pairs, we should find something. So I'm going to jump to USD JPY. And you can see that, first of all, we can recognize that this is that pattern. In this case, it did do it a couple times before it went. But even here, you can see that this broke up, pulled back, went through. It's the same thing. How do we set our stop loss? Well, on this one, ideally, we would have liked this candle to have broken through, and you could have just taken the buy signal then. But because we didn't get that, then your chances are you might be out of your trade because this candle just pulled all the way straight up and through, which never left us a good trade. If we jump to something like NZDJPY, you can see that I'd already taken a trade. We'd broken down, through, retested. Then on the next candle, I had taken my entry. I'd taken this off a lower time frame. So I'd taken this based off the 30-minute chart. You can see that we had a sell. We've got our label and we've taken it. I would ideally like you to wait for the end of the candle. I had taken this because I was in the middle of a live stream and it was practical to do so, combined with the news that was at hand. So realistically, we should have been waiting for this. Our stop loss I'd set just past the zone, based off the candle that was prior. I could, in reality, have also set it to the edge of the zone like this. Both would have been perfectly acceptable. My take profit was set all the way to the next one. I'd set it just into the zone slightly, but it's more precise if you just set it to the very, very edge of the zone, the close side. Now, as long as your risk-reward ratio is 2 or better, then it's a good trade. You can be looking at trades where they're in the 1.5 to 2.0 range, but I would much prefer if you're looking 2+. Ideally even over 3+. Just because it means that your win rate doesn't have to be quite so high to be profitable overall. If you're taking 4 of these a day and you only get 1 winner, you're still going to be break even. If you get 2 winners out of this, then you're going to be doing really well for the day. If you're taking 10 trades, you're only going to need 3 trades to come through to be winning overall. So it makes it much easier on you. Now, you can see that again, I've got a bunch of zones drawn. This was drawn off of a lower time frame. You don't have to draw off lower time frames. You can just do it off the time frame you're trading. I was, again, in my live stream, and in my live streams I need shorter positions in terms of their time scale. So I dropped down to get where the lines were. That's why I had drawn it. Again, all we're looking for is those break and retests. So when it has broken through, it's testing the level again, and then it's shorted on whatever time frame you're trading. In this case, it was a lower time frame trade, which means that we wouldn't have caught it on this one. However, you may have caught this one where it has broken through. This candle has pulled all the way back up. That's where you could have grabbed your entry. But then you would have been entering here to go all the way down to where my X is, instead of entering here to go down towards where my X is level-wise. Now, if we move on to something else, let's pick on gold, for instance. Sometimes you're not going to be able to draw levels because price hasn't been there in such a long history of time that you won't have the data for it. In solutions like that, we are going to use the Fibonacci retracement tool. Now, I'm going to draw this in the way that I would conventionally, which we call in perfect entry the magic fib. The way that this is drawn on gold would be you draw it from round numbers of 1800 to 1900, and then we can go from 1900 to 2000. If we're looking at something conventional, if we go back to Euro USD, you can see I've got a bunch of levels, but if I wanted to draw a magic fib, say we were in something that we haven't seen for a long period of time, like say we're up here, if price was in this range up here, then I would take 1.1 and I would draw it from 1.1 to 1.2, and that would be my set of guides. If this is too large, you can draw it from one level in your magic fib to the next, and this will give you those tighter levels that still give you enough room to move. So if I move that back down here, you can see if I was to draw my magic fib, it's going to be far too large. So I'm going to draw it from 1.0 to 1.1. And you can see, I'm just going to get rid of some of these so that it clears it up a bit. I actually just got rid of my indicator, hold on. You can see that this in general is going to be far too large as it's going from one level to the next. What we can do, if you do need it, Euro USD you'll probably be okay, but if you do need smaller ones, again, you draw it from one level of your magic fib to the next, and we always work from bottom to top because it keeps the consistency. So now you have smaller levels, which you can see you've gone from like this one to this one. You can see you could have gone from this one to this one, or again this one to this one, so on and so forth, that you can build in layers. Now, obviously, a bunch of these pairs that I've just shown you are USD pairs and gold. Currently, we're in the midst of a war between Israel and Palestine, which gives some fundamental issues. Also, this was based off of CPI news. Forex Factory gave results earlier. Just use Forex Factory for the news and you'll be able to be not looking for trades just before news, because it's not smart. Just wait till after news, for instance, an hour after, or a few hours before you can take your trade. So, I've walked you through how we can build zones, how we can deal with it if there are no zones, because something like Bitcoin might not always have zones if we're into all-time high territory. Same with stocks like US 30. As soon as we break sort of this high, we're basically out of levels, so we'd have to draw a magic fib, which I've already drawn one, but we'll do the mini one just to help out. And you can, again, we can take our levels and we can go from one level to the next level, to the next level, and use it. Again, the same break and retest concept of just going hit, bounce, go, or through, bounce and go, or straddling, like that. So the same concept applies, you just have a much finer window to look at it in. This is something which you'll develop over time. It might take you a few weeks, it may take you a couple of months, but over time you'll start to see the pattern just through repetition and practice. Some other position examples, you can see that we broke, we retested, and that's why we have a trade up to the next one. In this case, your entry should really be as far down as you can because it's going to give you the best risk reward. I think I entered somewhere there. But realistically, 3 to 1 is still okay. In this case, you'll see that my stop loss, because of how late we'd entered, I just set my stop loss a little bit below, and then even just below where we'd broken through from, because I considered that to be important. You can see that we've had break and go. If I set mine under this candle, it should be okay. The only other things to cover are present state, so 12th of October 2023 for the next week, maybe a couple of months. Gold, we should only ever really be looking for buys. Due to the nature of being in a war, gold is normally a buy in a war. Same with oil. And then Swiss franc pairs, the Swiss franc will tend to get stronger due to the nature of it being half tied by gold. So you can see that I'd taken a trade here. It was off a lower time frame in live. And in theory, I could take a trade from here to the next level, which I'd need to draw. This doesn't count, it's only 2 points. Our next level is going to be somewhere here. In fact, I can make it this. So our next level would be here. So in theory, I can go and take a trade that runs from here. Set my stop loss. I'm just going to set it to the end of this candle. It's going to be wide enough. To the next one. Now, you could jump it all the way up to here if you wished. Going the previous candle plus a couple of pips should be fine. That would set my stop loss, and then I can just sit, watch it, take my trade on MetaTrader. If I was to go and enter the trade, what pair was this? ORD CHF. So I'm just going to go ORD CHF. We've seen the trade off the H1. We can make our entry. And now we have entered. I would need to remark this. My stop loss, realistically, I should be waiting for this entry where the previous candle closed, but I'm somewhat late. It's 17 minutes into the candle. My stop loss will be up here, which is 57542. So I'm just going to click and drag that to 57542, which is here. And then my take profit, I'm going to drag down to here, which is 57210. 57210, like so. Which gives me a risk of $260 for a reward of 550, which is over 2 to 1, as we can see from this. So that's how simple it is to find a trade. If anyone has any questions on this, please make a comment and I'll answer them, and if needed I will make a follow-up video. The idea is that we're just going from zone to zone using the rule set, so that we're following the high time frame trend. We look for a star. They're either in line where it's star and signal at the same time. They can only be one zone ago. So this is one zone ago. There was only one zone between it. And if it's not them being in the same line, the star needs to come first. In this case, both come together, so it's fine. If the label came here, that's also fine, as long as the star is first. If anyone has any questions, do let me know. I will be reading the comments and answering them. Thank you for watching, and I'll see you all in the next video.